What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Thursday, January 19th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, doing a solo show. Stuart is currently flying back from presenting at the World Economic Forum in Davos. He was actually on a panel today with Al Gore and Larry Fink and SBF, just expounding on world affairs. So we look forward to a report back from Stu at Davos. A quick programming note: I will be gone tomorrow and Sunday doing some undisclosed items. And so you will have to deal with Stu as a solo show. So I'll go ahead and apologize up front for that. I will do my best to hold down the fort tonight, and then starting next Tuesday, you get us back together in full force. I still have a great show for everybody today. It's going to lean way towards oil and gas, one, because that's what I love, and two, that's really what I'm seeing as some of the key things going on today. We're going to start by talking about OPEC and how they're expanding. And there's this article called "OPEC Expands Control of the Oil Markets as U.S. Shale Growth Stalls." It's really kind of a holistic view, taking into account some of the EIA numbers, the IEA numbers coming out today, and then looking back on the Dallas Fed survey. It's a great article here talking about how OPEC is probably going to be becoming, taking control back away from shale oil. I think there's some interesting nuggets here. We'll cover that. The next thing we have to cover is just really what happened with oil prices today. We were up all the way to about $82 off some great China demand forecast. And then all of a sudden we hit a wall with some comments by two Fed presidents, which, oil being tied to the dollar. When the dollar fails and interest rates may go up, that's what's happening there. So we'll cover what that means. Natural gas also took a hit as we just see some warmer weather. The overall markets didn't do well. We were down about 1.5% on the SPY. NASDAQ dropped 1.2 percentage points. We'll cover what that means. And we have a big divestiture coming out of the Eagle Ford. Chesapeake, as you know, they have been marketing their assets for a while, all of their non-core assets, including their South Texas assets in the Eagle Ford. They just announced that they are selling a portion of the Eagle Ford assets for $1.425 billion to Wildfire Energy. They are a private equity company backed by Kane Anderson and Warburg Pincus. So we will dive in to some of the details and what this might mean for the Eagle Ford going forward. I'll wrap it up with a couple other thoughts just to get you kicked over to the next day, but otherwise we'll keep it short. Before we get going, guys, again, check us out. World's greatest website, energynewsbeat.com, dashboard.energynewsbeat.com. The best way to stay up to date with all of your energy news. That dashboard, in my opinion, is the best place that combines some key high-level data. We'll get crude oil and natural gas storage numbers tomorrow, which I guarantee we'll cover here in a little bit. You can check those numbers out there. We constantly update it daily. We're on like 2-week sprints. So we've got a dev call right after this. So I got to get this show recorded, get on a dev call to bring you guys what you need. I mean, I'm slaving for you guys. So please check it out. Dashboard.energynewsbeat.com. We appreciate it. World's greatest website, energynewsbeat.com. But enough of the pleasantries. I want to start with the first article I mentioned, with this OPEC expands control of oil markets as shale growth stalls. I think this is an extremely interesting article. One, because we're beginning to see a trend here, and I'll read the top paragraph. After a decade of exponential growth, the U.S. shale patch is no longer the swing producer in the global markets. That role is now back in the hands of OPEC and its largest and most influential members in the Middle East, analysts and industry executives say. Now, as you're reading every article, your flag should be going up. Who are these analysts and industry executives? Well, I'll tell you who one of them is. Goldman Sachs' Jeff Curry. You know where I stand on Goldman Sachs. If they should change their logo to them riding a bull, I think they are the bullish. I think they are who are the people that put up a red flag, and the bulls run through. They are like bull dancers or whatever they're called. They love them some bulls. So one of the top headlines says Goldman Sachs Jeff Curry sees OPEC's control over oil markets growing this decade. Okay. So that's the analysts and energy executives. Interesting. Okay. Interesting. So here we go. A number of factors have combined in recent months to weigh on U.S. shale production growth. I agree there. From capital discipline to labor shortages, from a lack of external capital to cost inflation and high interest rates, from exhausting prime locations to drill to steeper drops in well productivity over time. Holy smokes, whoever wrote that paragraph hit the nail on the head. It's happening right now in U.S. shale. Things are way too expensive relative to the amount of tier 1 acreage available. There's not that much tier 1 acreage available. And all of these other things we listed, labor shortages, high interest rates, that's killing us. Trust me. Exhausting of prime locations. Nobody's selling tier 1 acreage because tier 1 acreage is making you extreme amounts of money. But tier 2 acreage, tier 3 acreage it looks good. It doesn't look great. And if all of a sudden AFEs are 30% higher on a per well basis, eek. So what does that mean? Well, I think there's this interesting quote here. A total, and this comes from the article, a total of 32 E&P executives selected cost inflation and or supply chain bottlenecks as being the biggest drag on the firm's production. 27% chose maturing asset base, 16 indicated availability of capital, other options received 9 or less. Okay, so this is a quote from one executive at an E&P firm that said that it was in the comments of the Dallas Energy Fed survey. Geopolitical risk, economic uncertainty, material and or labor shortage, and an administration that is hostile to the industry. Okay, I get it. You got to get your little jab at Biden in there for guys like Stu. Have made it difficult to project what the next 12 to 18 months will be like for the upstream sector. So, I mean, I hit the nail on the head. I think of all of that, as much as Stu, wants to, and I think that this administration hasn't done a great job with oil and gas. I mean, they did say they want to shut down all oil and gas, but I mean, that's just them pandering their base. I don't think they're actually going to do that. I don't think they're swift enough to actually do that. Now, they've done what we've talked about a lot with Stu is, regulation through regulation through legislation. So I'm not saying they're doing a great job, but I think of all of those things that they've listed, I don't think politics is really number one. I think that's 4, 5, 6 on the list. As much as, politics plays a big role in what goes on in our industry. In this case, I think there's all these other factors. And I just think this article does a really, really, really good job of laying out, mainly why U.S. shale has probably peaked and may not necessarily peak, and why the idea that this year in 2023 we're going to reach 12.4 million barrels out of the Permian, which is the forecast via the EIA's January estimates, that's going to be tight. It's going to be tight. And if we're going to continue to grow year over year, something's got to give. It's got to become cheaper to drill. Prices need to go through the roof. Availability of capital needs to go up. All these things need to happen, and then you'll get back onto a growth. So I would check this article out, guys. Again, OPEC expands control of the oil markets as shale growth stalls. I just noticed in here. We have Enverus expects global demand growth at 1 million barrels per year, half driven by the Chinese reopening. They also said that U.S. oil supply will be modest this year at around 400,000 barrels, exit to exit at the end of 2022, according to Enverus Intelligence Research. So, Enverus thinks so. So, who knows? Who really does know? But I think the tea leaves are out there from what we saw in the Dallas Fed survey to I think a lot of the stuff that this article tightens up that, while I think the Permian is clearly the place to be in the oil and gas business, it's really you're there or else you're out of the game. And so I think the divestiture we're going to talk about, it will be a very interesting example of how some of these maybe non-core asset divestitures play out for the buyers, not the sellers. I think Chesapeake maybe made a great decision selling, but I think it's pertinent that we first cover, I think, what just happened in the overall markets today, guys. I think from an overall economic standpoint, where the SPY was down 1.5 percentage points, NASDAQ dropped 1.2 percentage points. Mainly what we're seeing here is Microsoft and Amazon came out and said they're going to be laying off jobs. It just, all signs point to an upcoming recession. I don't think it can be really any clearer than that from the signal standpoint. Now the question is what happens going forward, but that seems to be the sentiment moving, and that really is what impacted oil prices. I mean, we had two things really interesting happen today. The EIA came out and expected a 1,000,000 barrel, along with Enverus. They Boo, and Bears got the same number as the EIA. Good for or the EIA, the IEA, the International Energy Agency. Good for them. But a 1 million barrel demand growth, we're looking at about like 104.9 million barrels of oil demand. That drove oil all the way up to about $82, $83. And then oil hit a wall at about 8.15, tumbled all the way down to where we're currently trading at here on the 18th at about 6:21 p.m., 79.45. And that, I mean, mainly has to do with the weakness of the dollar. We had Fed president. Let me pull up the quote here. Give me a second. Yes, Fed chair, St. Louis Fed president James Bullard and Cleveland Fed president L'Oreal Master said rates needed to rise beyond 5% to control inflation. Oh, that's not good. We were hoping 5 probably was going to be the cap. Clearly, it's not. That bar probably being moved to 6 now. And with the dollar tanking, that's what's going to pull down crude oil prices. And so again, we're in this mode of China can do so much with their demand wise reopening. And then what's going on with this recession, we are sort of in a wait and see period. So, it was great to see that temporary spike above 80, but hey, I mean, $79, $80, it's all the same. So if you're making money at 83, you're probably going to make money at 70. So in the grand scheme of things, is there that big of a difference? No, but it's just interesting how these, two macro events, play off of each other, and you can so clearly see it in the charts. Moving over to natural gas, we're currently trading at $3.32 right now. That's, again, a nice tumble from earlier today. Mainly, there's a massive supply-demand imbalance that's going on right now. We've seen that in the last 2 EIA storage. We've had builds in our crude oil, or in our natural gas storage, which is absolutely insane. We're drawing. Usually in winter, we are drawing from storage. So getting builds, which we had last week, was absolutely incredible. We'll find out those new storage numbers tomorrow or today as you're listening to this podcast. Range of expectations, 13 to 81 draw from our natural gas reserves. Last year there was a draw of 203. So I mean, you got to give, it's going to be a modest draw, even if there is, it's like last week and we get a positive draw. Holy smokes. I don't know. We might see $2.90 gas, and that's not necessarily good for everyone, for anyone, especially these White Hawk resource or these Wild Horse resource guys. They just dove into some Chesapeake assets. So we'll get those numbers tomorrow. Again, nat gas trading at $3.32. We also did get the I'd be remiss if I didn't say we did get the API estimate of the EIA's crude oil storage tomorrow. Both the EIA crude oil storage and natural gas storage numbers drop Thursday or today versus on Wednesday, which is when they normally do it, and that was due to MLK. Forecast a negative 1.7 million barrel draw. Ooh, they got a 7.6 million barrel build. So, taking that into account on top of all of the other supply imbalances, it's going to be very interesting to see where things go. So, as Stu would say, buckle up, people. I think the last thing that we need to cover really before I let you guys get out of here is this acquisition. Well, I think there's 2 things. First, Permian Resources Corporation. We love them. Ticker symbol PR. They announced that they've done a series of portfolio management transactions, compromising of a bolt-on transaction, a divestiture of non-op production acreage, and a divestiture of portion of its water infrastructure assets, all in Reeves County. So to give you an idea, they acquired 40,000 net leasehold acres, 3,300 net royalty acres, and 1,100 barrels of oil equivalent per day, about 73% of that oil of net production located in Lea County, New Mexico, from an undisclosed third party for a total purchase price of $98 million. They've also divested some non-op in Reeves County, consisting of about 1,800 BOE per day at 44% oil, 3,500 net leasehold acres to an undisclosed third party for $60 million, which reflects a valuation multiple greater than that of 5 times 2023 estimated EBITDA. Whoop, whoop. PR guy of the week, whoever this is. Let's scroll down. 5 times EBITDA. Love that. Love that. Hayes Marbury, Senior Director, Investor Relations. Love it. Now, that'd be very interesting to see how they come up with their EBITDA estimates, as it's a non-GAAP number, but, we think it's good. The divested acreage represents a substantial majority of the company's non-operated position in Texas and includes minimal retaining inventory. They've also sold 300 net acres in Eddy County for $35,000 an acre. My goodness, $10 million for just acre. I mean, people are buying acreage for good prices, though. And then finally, midstream infrastructure transaction. They signed definite agreements to an undisclosed party that they would divest a portion of its saltwater disposal wells and associated produced water infrastructure in Reeves County for $125 million. The full consideration we received at closing with $60 million, subject to repayment of its certain thresholds tied to Permian Resources' future drilling activity and service area over the next years. If they are not met, they expect to retain full consideration based on its current development plan. The counterparty has a strong record of operating midstream assets, and the divested infrastructure has ample capacity to service the company's future proceed needs. The transaction will close first quarter of 2023. So 3 moves announced. Hey, people are making moves out there. If you're trying to get in on the action, there's never been a good time. People are trying to wheel and deal right now. I think the biggest transaction we heard about today was Chesapeake Energy Corporation announcing the sale of a portion of their Eagle Ford assets in South Texas, which they have been marketing for a little bit, about 8 months now, ever since Kimmeridge came out and was trying to basically get them to divest the whole thing. So if you wonder how much power Kimmeridge has, I mean they're at the heart of this, pushing for something like this. So they go ahead and sell off a portion to Wild Horse for $1.425 billion. It was about 370,000 acres, 1,300 wells in Brazos Valley, 27,700 barrels of oil equivalent during the third quarter. That's per day. So yeah, it's per day. Net proven reserves associated with properties were 96.8 million. A lot of reserves. So here we go. Chesapeake expects the transaction to close first quarter of 2023. They will receive $1.2 billion upon closing, subject to customary adjustments. Man, I'd love to be the person that makes that transfer. And I'll see that pop into a bank account. With the additional $225 million to be paid in yearly installments of $60 million over the next 3 years and $45 million in year 4. Chesapeake can basically use proceeds to repay borrowings under its revolving credit facility and be available for its share repurpose program. All right. I think this is interesting for a lot of reasons. One, it shows that Kimmeridge has insane pull on that board. They're a minority shareholder. They've been buying interest for years now and have been pushing to consolidate in, the Marcellus and such, and some of their scoop assets. So I think this is a big move going forward to sell, their Haynesville assets, So I think for Chesapeake, this obviously gives them some flush cash right now. It allows them to work around and give them some running room. I think for Wild Horse, which is a Warburg Pincus and Kane Energy Partners. It's private equity. Warburg Pincus just came off a couple divestitures. They've got some money. They've got to deploy some money. Is the Eagle Ford assets or these South Texas assets them? I mean, you think so. The thing is this: 377 net acres. There's running room there, and you can. I mean, 1.4 billion is a lot. Don't get me wrong, but can you flip that into 4 in 2 years? I don't know. When we look at it's 85% liquid. Okay. Okay. Where do you see prices going? And, you know, because again, that's going to help in the valuation down the road. Again, you don't want to necessarily be looking at an insane what pricing environment's going to be, just run strip when you're doing your analysis. But if you're going to think about this from a macro level, you're gonna be able to grow this asset into a $4, $5, $6 billion asset, and then who's gonna divest of this? Who's then you have to second order think, who's then the buyer down the road? Who wants to buy this asset in the future? Is it going to be a big company? Is Chesapeake going to get back into South Texas? Is Exxon going to buy it from South Texas? Or are you just going to cash flow the thing? Is this thing are you hoping this thing that in 6 years will just cash flow positive and that maybe, I don't know, be interesting. It's not going to be, it's not going to be cheap to operate these wells. Trust me. So again, very, I think for Chesapeake, this is a win. For Wild Horse, we'll see. The proof's in the pudding. If they can flip this asset, or they can drill it out and bring that value up to where they can they can do some interesting things. Who knows? But if I had to pick a side on this one, I'm going with Chesapeake, which is rare. Which is rare that I side with somebody like Chesapeake. But I only can be fair. I'm looking at my notes here, guys. I think that's about all I've got. So I don't want to keep you too long. Thank you for letting me listen here and lecture on oil and gas. Hopefully Stu will be back tomorrow from Davos, assuming he doesn't the blood ritual that he does over there goes well. He'll be back and you'll get more of an energy taste, but we appreciate it, guys. For Stuart Turley and Michael Tanner, guys, we'll see you tomorrow.